To the tax impact on employers, again, there's a lot of debate and a lot of queries that I receive from companies wherein they say, can I make a direct payment to LICA, and I don't want to create a gratuity trust. What if I just create a provision? See, it all depends on how the income tax has carved out different provisions. If we look at the interplay between Section 3615, Section 48(4), and Section 43B, they say wherever companies are making a contribution towards approved gratuity fund, again, approved gratuity fund means those funds which has received the approval from CIT, then such contributions are allowed as a deduction, provided the deduction has been made before the due date of the filing the return of the income, and employer has made necessary arrangements for deduction of TDS. So this is the first thing, that wherever I'm making a contribution towards approved gratuity fund, in plain simple, it will be allowed as a deduction. Second is for companies who are just creating a provision. If you look at the provisions of Section 40A(7) of the Income Tax Act, such provision is not allowed as a deduction unless until those provision has been created to make a contribution to an approved gratuity fund, or for the purpose of making a gratuity that might have become payable. This is the second thing. The third thing is 40A(9), which says that any sum which is paid by the employer organization towards setting up or formation or as contribution to any fund other than an approved gratuity fund is not allowed as a deduction. So plain and simple, wherever companies might be making a contribution towards an unapproved gratuity fund, those will not be allowed as a deduction. Now, this is the entire framework of the Income Tax Act, but again, there's a catch to it, because practically what happens is when companies submit their application with the CIT, sometimes it may take 3 years, sometimes it may take 4 years. I've practically seen companies who have submitted this application, and 10 years have gone by and they are still to get an approval. So now the question comes up, when I have a gratuity fund in place for which I have submitted an application with the CIT has not yet approved or provided approval to that, can I, whenever I'm governing and I'm complying with whatever provisions have been laid down under the Income Tax Act as well as the related rules, will I be allowed to claim this contribution amount as a deduction or not? Answer is yes, based on a number of jurisprudence wherein the ruling authorities have told that it is the onus of the CIT to basically grant the approval. Once the company has submitted the application, they are duly complying with whatever provisions have been mentioned, then such contribution can be allowed as a deduction. Again, an important factor is whenever the CIT gives the approval, it is usually on a retrospective basis. So this is one key aspect that many companies need to be aware of.